Jenny Harrington, CEO and fund manager at Gilman Hill Asset Management, CNBC contributor, smiling despite Jenny, fresh off like a friendly but good-spirited debate with our friend Jim Cramer on the halftime report yesterday. You guys were going at it pretty hard over Intel. What was that all about?
Well, I think the thing is, on TV, everything tries to go into a box, right? Black or white. The reality is Jim Cramer and I are very much in the same camp if you actually listen to the nuance. Okay, here's the thing. You know what? What we're both saying is that there's huge possibility, huge potential for semis. And we're just looking at it from different angles. I don't mean to be like a sissy right now and trying to like find common ground. But the reality of what is going on is that the U.S. semiconductor market is like $566 billion a year. Then within that, there's the PC space. You've got Intel that will produce revenues of like $75 billion. And shoot, hold on, I've got my notes right here because I didn't know we were going straight to this. And we've got AMD that will produce revenues of $16.5 billion. Yes, AMD has been eating Intel's lunch and taking market share, but there's room for everybody. And so what Jim was saying is, part of what he was saying is he's like, you know, they're taking market share, this and that, blah, blah, blah. He loves Lisa Su, who's the CEO of AMD. He doesn't like Pat Gelsinger. We have differences in perspectives on that. Then what the debate turned into was, and then it went into Stephanie's. I'm trying to think of the whole thing. But then when it turned into a bit of a degree was like the bigger picture, which is that we all know that semis are cyclical. We know that cyclicality cuts both ways. And then what we were talking about is valuations, right? So in my opinion, you've got Intel that's trading at about 12 times earnings. The pushback on the AMD and NVIDIA is that their valuations are stretched. And so when you have a cyclical market, I think that there's, you know, and this is one of the things actually afterwards that I talked to Steph about is like the price for perfection, right? Intel is priced for nothing. AMD and NVIDIA are priced for perfection. But the reality of this is there is room for AMD, there is room for NVIDIA, there is room for Intel. And over the long term, they will all continue to mint cash. So, you know, choose your horse, choose your player. The reality is you're probably going to make money in all three if you have a long-term patient time horizon.
And apparently room for me to throw you onto the TV bus live on the air at 5:50, Jenny. Sorry about that. I was watching. It was a good-spirited debate with Jim. I think he enjoyed it as well. All right, let's move on to a tech name that maybe you are prepared to talk about a little more, which is Cisco. Again, I feel like the argument you just made for Intel, you could probably swap out for Cisco as well.
Right. Absolutely. And then you could even extrapolate this into a bigger conversation about tech, right? Like, oh, do you want to be long tech this year? And I keep saying, depends on which part of tech you want to be. I do not want to be long the ARC complex tech. I totally want to be long the Cisco kind of tech, which is a company that's trading at 15.5 times earnings. Earnings growth should be about 7% next year. This benefits from return to office. And to your point, the conversation that you were having just about this before about Manhattan real estate, and your guest was saying that will never be the same. You know what? For Cisco, that's good. Because if people partially work from the office and partially work from home, then the networking complexity is so much greater than it used to be. And a combination of working with Zoom and not with Zoom and in person, all of that is complex and complicated and hard and needs security and wildly benefits a company like Cisco. So yeah, do I want to be there? Absolutely. And that fair valuation in this kind of murky market makes me really comfortable.
That hybrid environment, by the way, Jenny, is also very bullish for energy demand because companies have to leave all the lights on regardless if 2 people are there or 2,000. And then you've also, of course, got your work from home. So you're kind of using almost double the energy because people are split up. I know you like names like a Shell and some others around the world for income.
Right. And I think you could go on and on about all the demand for energy. And Brian, you and I... Yeah, you and I have been talking about this for 2 years. You know, well, other people were out there saying like, oh, energy's uninvestable and energy's dead. You and I have been some of the few, I think, or you and I were 2 of the few who agreed 2 years ago, like, hey, guess what? We both drove our cars to work this morning and we used fossil fuels to get there, and we didn't ride unicorn, sunshine, and rainbows. So there's so much demand for fossil fuel. I know you and I both would love to live in a beautiful world where we don't use it, but we do. And that's going to be very, very, very long term that we're going to wean off. I mean, there's a million interesting things, and we only have like 4 minutes. But this is like a 2-hour conversation that'd be amazing on how long and why and all the reasons that we're going to be dependent are. So yeah, you've got Royal Dutch Shell, you've got Total in our portfolio, we've got Chevron. They all have great income. They will not actually be that negatively impacted by what's going on in Russia. Probably higher oil prices benefit them. Anything above $70 a barrel will just help them mint cash. So I'm staying long, and then frankly, I'm being a little greedy.